Ready to jump into the home buying process but don't have cash to make a cash purchase? Well, first things first, how much money can you afford to spend on house payments each month? And can you qualify for a mortgage? There's not much point having an agent take you to home showings if you can't afford to buy the homes you're looking at. Reality rules the day when it comes to the biggest purchase you'll probably ever make, your own home. And your credit score is really important when it comes to successfully taking out a mortgage. So why does that little 3-digit number have such power over you and your life, and my life too? Well, let's dig into that over the next 3 or 4 minutes. By the way, you'll sometimes hear your credit score referred to as a FICO score. FICO is a specific system for calculating a credit score. People often use the terms interchangeably, so it means basically the same thing. So lenders look at your credit score as a way to assess your ability to pay back debts and to make payments on time. And those things are really important to lenders. Your credit score gives a good indication of how well you've handled credit in the past, whether it's in the form of credit cards, a loan to buy a car, a student loan, or other types of credit or debt. The higher your score, the better the indicator that you'll be able to pay off your mortgage and to make your payments on time. And believe me, mortgage lenders are really strict about making the payments on time. Remember, the bank or mortgage company is loaning you a gigantic chunk of money. If the lender does a poor job of vetting the credit applicants and a large number of those applicants eventually default on their loans, that means they quit paying them, well, then the lender itself is at risk of folding business, closing business, or going bankrupt. By and large, lenders learned their lesson after the subprime mortgage crisis of 2007 and 2008, when thousands and thousands of people who could never pay back a mortgage were nonetheless given huge loans with disastrous consequences for the entire economy. The mortgage industry has tightened up lending rules a lot since then, and a lot of that tightening has to do with your credit score. As a realtor myself, I'm glad about that, because I think it's incredibly sad to see people get excited by a home that they can't afford, and then they lose the home a few months or years later. So to start with, check your credit score. It shouldn't cost you anything to check it. Many banks and credit card issuers offer a monthly credit score update as part of their service. Oh, and don't confuse your credit score with your credit report. They're both important, but they're not the same thing. Right now, we're just talking about your 3-digit credit score, which you will find on the credit report. Your credit score not only tells a lender how responsible you are with credit, it also helps determine the interest rate and the repayment terms you'll get. So the higher the score, the lower your interest rate, and the better the repayment terms. If your credit score is low, you should work on improving it before you start house hunting. Now, there are companies that are called credit repair companies. They help repair your credit. But the things they do that they charge a fee for, they're all things you can do yourself for free. It just takes some time and some digging around on the internet. So if money's tight, why not try to repair your credit yourself before paying someone else to do it? So, what kind of credit score do you need to get a mortgage? Well, that depends on the kind of loan. For what we call a conventional loan, you probably need at least a 620 credit score. But if you qualify for an FHA loan, you may be able to get approval with a score as low as 500, and that's a big maybe. Remember, the better the score, the better the interest rates, the better the terms of your loan. It really is worth your time and trouble to try to improve your credit score before applying for a loan, unless you already have a super high score like, 740, 750 and up. So what's considered to be good? Well, between 670 and 739 is good. For the best rates, try to get into the very good range of 740 to 799. Anything from 800 and up is stellar. The median credit score in the U.S. right now for people applying for a mortgage is 765. But remember, each lending institution has its own level of acceptable risk. You can and should shop around for the best mortgage program for you and your particular circumstances. Don't assume that all lenders are the same, because they aren't. And by the way, if you're a U.S. military veteran with a VA home loan benefit, by all means use it. Your VA loan benefit is a terrific deal for you, and remember, you earned it. So what are some things you can do right now to start improving your credit without paying anybody to do it? So make all payments on time. Pay off any outstanding late charges quickly. Put that part of your life behind you. No more late payments. The less credit you use, the better. Lenders will look at the amount of your debt relative to the credit limits. So maxing out your credit cards each month is a big warning sign that you'll have trouble keeping up with mortgage payments. So don't max out your credit cards. And don't apply for any new credit until your home loan has been approved and your new home purchase is 100% complete. Lenders will check for new credit applications right up until the day you sign the final papers to make your home purchase. And if they find a new credit application, your home loan could be denied right then and there. I'm not kidding. I've heard of home buyers going out and purchasing a boat or a house full of new furniture or a new car the day before they were supposed to close on their new home. And as a result, their loan was denied at the last minute. And of course, they lost thousands of dollars of earnest money. I don't want to see that happen to any of you. So don't apply for new credit while you're in the process of getting a mortgage, period. Even if you have to move into your home completely unfurnished. With housing affordability being quite challenging in this post-pandemic era, every point of improvement on your credit score counts. I truly believe it's worth the effort to improve your score if you're going to apply for a mortgage. Any questions? Just put them in the comments. For more on the housing market, especially here in Idaho, check out this next video, and thank you for watching. Bye.